Hey everyone, it's Julie here with TipRanks, and today we're taking a look at a few stock picks from a top analyst on which he has a 100% success rate. So let's get into it. Alright guys, welcome back. Thank you all so much for being here. Today we are taking a look at a 5-star analyst from Citi who is currently ranked in the top 1% of Wall Street. We're taking a look at some of his recent buy ratings and in particular 3 stocks that he has a 100% success rate on. We're going to take a look at these companies, what it is that they do, and how the rest of Wall Street analysts weigh in. We found today's analyst under the TipRanks Top Experts page. Right under the Top Experts menu, we headed to Top Analysts, and I wanted to look for an analyst with a very high success rate when I narrowed in on Christopher Allen from Citi. Here we can see he has an 85% success rate overall and is currently number 35 out of over 9,300 Wall Street analysts. And on the right, we can see his list of stock coverage, where I looked for 100% success rates over here. You can check out a full list of Christopher's stock coverage over on the TipRanks website or right on the TipRanks mobile app. Links will be in the description down below. Just before we get into today's video, this is a friendly reminder that if you enjoy it, make sure you hit that thumbs up button and that you're subscribed to the channel as well. Now let's dive right into these top analyst stocks. First on our list is Marex Group. They trade under the ticker MRX, currently priced at $35.53, and the stock has climbed 88% over this past year, gaining 36% in the last 3 months. Marex Group is a diversified global financial services company, providing essential liquidity, infrastructure services, and market access to the energy, commodities, and financial markets. The Marex Group acts as a market maker, providing liquidity by quoting both a buy and sell price in a financial instrument or commodity, ensuring there's always a market for the products they deal in. They help specialized clients in managing risk through different hedging strategies and facilitate the buying and selling of financial instruments on behalf of their clients, executing trades on various markets. They also offer clearing services across multiple exchanges, ensuring that trades are settled and contracts are honored. Marex Group is fairly new to the public markets, hitting the NASDAQ back in April of 2024. So this third quarter report that came out back in November was only their third ever as a publicly traded company. They did come out with solid results and increased their full year guidance. For their third quarter, they reported earnings per share of 76 cents, beating estimates by 8 cents per share, and revenue came in at $391 million, which did grow 32% year over year. With that, they now anticipate their full-year adjusted operating profit guidance to be between $300 and $305 million. Our 5-star Citi analyst initiated coverage on the stock back in May of last year and has since reiterated buy ratings 5 times.
The most recent rating was on January 14th, with a price target of $39 for an upside of nearly 10%.
Chris commented that they believe MRX can outperform that fiscal 2024 operating profit guidance and that they remain constructive on the volume outlook and potential for volatility, providing a tailwind to top-line growth. Overall, they continue to like the long-term story given MRX's strong niche positioning with clear market share gain potential across its businesses, leverage to energy and commodity sectors, regional expansion opportunities, commercial client focus, and benefits from recent acquisitions. And it seems that the rest of Wall Street does agree. In fact, with just 7 current analyst ratings, Marex Group does come in as a unanimous strong buy. And the average price target comes in at $37.86, which would imply an upside potential of 6.6%. Looking at those ratings down below, our low end is a buy from back in November that's already been surpassed, so it's now a downside of 7%. Our more recent price targets from January, a bit more bullish. Here we have Chris's with an upside of nearly 10%, while our high-end price target are a couple at $40 for an upside of over 12%. Number 2 on our list is Apollo Global Management. They trade under the ticker APO, currently priced at $169 per share. This is a stock we've talked about before, most recently near the start of October. Overall, in the past year, they are up 67%, and in the last 3 months have gained about 15%. Apollo Global is one of the world's largest alternative investment managers. Their business focuses include private equity, where they invest in companies to improve and increase their value, credit with direct lending, distressed debt, structured credit and investment-grade securities, real assets such as real estate, infrastructure, and natural resources, along with some retirement services through their Athene branch. Apollo operates globally, emphasizing value-oriented investing, ESG considerations, and financial innovation. They shared their third quarter back on November 5th, where the company did have an earnings and revenue beat, plus saw record fee-related earnings. They reported Q3 earnings per share of $1.85, beating estimates by 12 cents per share, while revenue came in at $926 million, beating by $26 million. They had record fee-related earnings of $531 million and achieved record origination quarter with $62 billion in originations and $194 billion year-to-date. Our five-star analyst Chris Allen has been covering the APO stock for over a couple of years now and has rated them 8 different times. Of course, coming in with that 100% success rate, his most recent rating was back on November 5th, right after that earnings report, with a price target of $170. They noted that the trends in Apollo's asset management business remained solid overall, with strong flows, particularly in credit and solid capital solution fees. More recently, earlier in January, a five-star analyst from Deutsche Bank did reiterate their buy rating as well. As part of a 2025 outlook for this sector, they see a relatively good setup for the majority of their coverage in 2025, with the potential for a third straight year of 20% plus total return in U.S. equity markets. With 17 current analyst ratings, Apollo Global does come in as a strong buy, with 13 buys and 4 holds. Their average price target comes in at $184, implying an upside potential of 8.7%. Once again, our more recent price target's a bit more bullish. As we go further down the list, we do have our low-end price target back in November, which is a buy at $161, but is now a downside of 5%, while our high-end price target is the most recent here from TD Cowen at $227 for an upside of nearly 34%. You guys know the deal. If you've made it all the way to our third stock, then this is a reminder to make sure you've hit that thumbs up button. Last but not least, we're taking a look at BlackRock. They trade under the ticker BLK, currently priced at $1,047 per share. And this is another one we have talked about before, again near the start of October. Over the past year, they are up 36%, and in the last 3 months, up 7%. BlackRock is fairly well known as they are the world's largest asset manager. Their assets under management comes in at a staggering $11.47 trillion. The company manages mutual funds, ETFs, and other investment vehicles for individuals, institutions, and governments, and handles a broad spectrum of asset classes, including equities, fixed incomes, and alternatives. They also offer services like portfolio analysis, risk management, and financial advisory. BlackRock's latest quarterly report did come out just a couple of weeks ago on January 15th, where the company saw both an earnings and revenue beat, plus record net inflows. They reported Q4 earnings per share of $11.93, beating estimates by 66 cents per share, and revenue of $5.68 billion climbed over 22% year-over-year, beating by $100 million. They had a record $641 billion of full-year net inflows, and their full-year revenue increased 14%. BlackRock is another stock that Chris has been covering for multiple years, and he has a total of 14 ratings on. And he reiterated his most recent buy rating on January 16th following that earnings report with a price target of $1,200, implying an upside of nearly 15%. He commented that looking forward, they are incrementally more confident that this acceleration can continue. We have a positive flow outlook given ongoing momentum in ETFs, interesting possibilities and opportunities in retirement products, potentially increasing interest in FICC products, and historical performance during periods of re-risking. And Chris was not alone in this. Following that strong quarterly report, we saw quite a few analysts increasing their price targets. With 15 current analyst ratings, BlackRock does come in as a strong buy with 13 buys and 2 holds. And the average price target comes in at $1,180 per share, implying an upside potential of nearly 13%. Looking at those ratings down below, you can see quite a few analysts bumping up those price targets. Our low end is a hold here, which is a very slight downside at 0.09% from UBS, while our high end price target, we have a couple of them at $12.75 for an upside of about 22%. So that is a quick look at 3 stocks that top analyst Chris Allen has a 100% success rate on, plus other analysts agree and rate a buy. Let me know your thoughts on these companies in the comments down below. I always appreciate hearing from you guys. Keep in mind these videos are never a suggestion to buy or sell any specific stock, so please make sure you always do your own research and due diligence. Thank you guys so much for watching. Have a wonderful day, and I'll see you back here next time.